Okay, so in today's lesson, we're just going to be learning the absolute basics of what trading is. So, pretty much just what it is and how it looks like in its most simplest form. So, you'll get an understanding of what futures is and pretty much just the whole concept of trading as a whole, too, as well. Anyways, y'all, let's just jump straight to it. Okay, welcome to the first of many lessons in your day trading journey. Today, we're just going to learn pretty much what futures are. So, let's just get straight to it. So, futures, what are futures? Okay, because I know you guys have been asking this question, like you guys want to know what this is. Futures pretty much are an agreement to buy or sell a commodity or financial instrument at a predetermined price. Essentially, all this means here is, let me get out a pen if it lets me, is a commodity is something like gold, oil, things are just more physical. A financial instrument is something like crypto or NASDAQ, things that are actually like, not as physical pretty much. So that's what a commodity and also a financial instrument means. And what it's saying here is, we all seen these graphs before where it pretty much shows buy low, sell high. So all this is saying is that you buy low and you sell high. So in the perfect world, you would buy, let's say, gold at this price and you would sell gold at this price. And the opposite would be you would sell now and buy back later. So essentially, I would sell my gold sell my gold. My apologies. I would sell my gold here and buy here. And then the difference in this price is the profit I made. So that's pretty much what that is. So if a trader thinks the price will go up, they will buy a future contract now and sell it later for a higher price. If they think the price will go down, they will sell a future contract first, then buy it back cheaper later. So I'm just going to go through some examples that I already do have written down for you guys here. You guys can also go ahead and answer these examples as well. It's very simple, and the only reason it's simple like this is just so you can at least understand the very basics of what we're teaching here today. I don't want to overcomplicate things, especially when it comes to just the introduction. So first example here, Leo loves trading cards. One day, a rare card is worth $10 and Leo believes the price will go up soon. So he makes a future deal. He locks in the price at $10 per card for 100 cards. And a week later, the price of the card climbs to $15. Because Leo locked in the price at $10, he can now sell his contract for more value. How much in profits did Leo make? So let's actually just jump into the charts here and actually just go and see how this would look like in a physical chart. So this is a chart. As you can see, we do have red and green. Green meaning up or red meaning down. You can change these and we'll tap back into that later in the future. I'll just keep things simple for now. So pretty much what that example did say here is that Leo, he bought these cards down here, and a week later the price went even more up. It actually went all the way up here. So he's made some profits, and our question is how much profits did he make in this right here. So to figure this out, it's very easy. You would just do $10 and then you would just minus that by the $15 to find the difference there, so which is $5 profit. So he's made $5 profit per card, but he has 100 cards here. So in total, we got to do, of course, 5 times 10. You won't be doing real math in trading, just to break this down so you guys can at least understand, how this is and how it works pretty much in the most simplest and basic form right here. So how much has Leo made? He's made $500 from this future deal right here. Let's go to the next example. So Maya owns a small coffee bean business. Right now, her coffee beans cost $100 per bag, and she believes the price will drop soon. So she makes a future deal to sell all 50 bags next month for $100 each, locking in today's higher price. A month later, Maya was right, and the price of the coffee fell to $70 per bag. Because of her future deal, she can now buy a bean at $70 and still sell them for $100 under the contract. How much in profits did Maya make? Well, just like the last example, let's hop into the charts and actually see how much in profits she made. So this is a sell deal or a sell contract here. So we're actually looking for sells. Pretty much all this means is she put in a sell contract up here to sell it later. So down here. So essentially she sold it for 100, and then the price now right down here is 70. So the difference between these two is the profits she made. So let's go back on the charts and see how that looks. So to do this math, pretty much all you would do here is, again, to do this math, pretty much all you would do here is just take the $100 and just minus that by the 70. And then you'll see that she has made $30 profit per bag. And then she has 50 bags here. So pretty much just 30 times 50, which would give her 1,500. Rich gal, millionaire. Okay, let's go to the next example, the last example here that I do have for you. Eli, my apologies. Eli thinks gold price will go up soon. Right now, gold is trading at $2,000 per ounce. So he makes a future deal to buy 100 ounce at $2,000 each. A few days later, gold price drops to $1,950 per ounce. Since Eli agrees to buy it at $2,000, but the market price now is $1,950, is his contract worth more or less? And on top of that, if so, how much did Eli gain or lose? And lastly, let's go into charts one last time, just so I can actually show you guys, just how this looks. So let's just try to find an example here. Actually, I already found we can use this one right here. This example would work. So pretty much Eli was hoping that his $2,000 gold price would go and sell for more in the future. So he put in a buy to eventually sell his gold for more than it was worth right now, collecting the profits. But sadly, what happened, I'm so sorry, bro, but his went down here, all the way down here, and he lost $50 because it went down to 1,950. So he actually lost this trade. And how that would look, again, for the math here, would be his $2,000 here, just minus that by the, very simple, 1,950, and then the remaining is 50. So $50 is how much he has lost. And then to see how much, because again, he bought 100 ounces, per ounce was $2,000. So again, 50 times 100 ounce is $5,000. Bomba clots, bro. I'm so sorry, my boy. No, that's very rough. I'm very sorry, but he's lost $5,000 from this future contract because the contract went against him. That's pretty much the end of this lesson. As you guys can see, it's a very quick one. But there's some terminologies that I actually do want you guys to actually take notes in. Long meaning buy. So when someone says they're going long, it means they're going up and they're buying. When someone says they're going short, it means they're selling and it means they're going down. So they're hoping the market goes down for them to make profit, and for long, they're hoping the market goes up for them to make profit. Commodity is pretty much a physical good that can be traded. So as I said before at the very start there, gold, things like that. And a financial instrument is like NASDAQ and stuff like that. And a future contract is an agreement to buy or sell something at a set price on a specific future date. Okay, so that's pretty much the lesson for today. It's very simple, very quick. Next lesson is going to be on candlestick. And if you are looking for the resources that I use, like the slideshow or in the future trading journals, things like that, go ahead and join the Discord. I will be active there too as well. So if you are looking for more questions, tap in to the Discord. I trade live every single day, every single trading day. And besides that, go ahead If you did find this valuable, like, subscribe. I will catch you guys on the next one. Let's go.